Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar displayed a very volatile whipsaw price action as the market challenged the top side of the session around 69.25. However, the market found that resistance a little bit too strong and therefore took the challenge back to the downside, but still respecting the level around 68.60. From the close of New York, we've posted an inverted hammer. The inverted hammer is a type of Japanese candlestick found after a downtrend, and this has been a short-term downtrend since 71 cents. However, we do need to monitor this candle as it is typically seen as a trend reversal signal, and therefore a little bit more confirmation could assess that the market's found a bottom and we may see a potential rise. That being said, we still need to see a break above the region of 69.30 now to support the rise beyond this level and up towards the region which is seen around 69.80 to 70.35. With that being said, a break beneath 68.60 would be quite devastating for the bulls, as the market may expose the region of 67.30-35. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, has rallied or extended its advance and is now currently sitting at 108.80. A close above 109 would be very concerning, as it could indicate further bullish signals for the US dollar and see the rise increase, possibly up to 111 to 112. But before that's been viewed, let's see how the market plays out today. The euro has reached its objective, which was at 99.50, and actually the market is extended slightly as it now trades at 99.33. Viewing the indicators, we are oversold. However, the ADX is still trending to a bear case. We need to take a look at the broader picture due to the fact is that we're back in levels we haven't seen for some time. And as I mentioned, if the dollar can break above 109, this would put a devastating blow to the euro and look towards the region of 96 as a potential target, or somewhere around 95.5 to 96. But before we get too bearish, as I mentioned, we are oversold and therefore could potentially see a short-term rebound back towards the 1 or 2, the parity region. .em also reaches his objective, which was at 137.30.50. Currently hovering around this region. Keep an eye, because the market may actually take a downturn as we are overbought, but a little bit more indication is needed or warranted due to the six or so days of these Japanese candlesticks to the bull case. May actually see a short extension. As we saw previously, we saw a spike above this level and then it gave it all back, and therefore above 137.50 towards 138.15 could be the same pattern as we saw back in early July, and then see the tumble. Looking at the pound, well, the market was looking towards that 117.20-70 area, and from the close of New York this morning, the market's trading at 117.60. Still pressure in this downside, and the market is still looking, as the dollar strengthens, to challenge the bottom side of this range around 117.20-25. Reassess from there. If we break beneath there, then for the short-term period, I will be neutral just to see how the market plays, due to the fact is that we are oversold and it does warrant a bounce or rebound very, very soon. The market took the challenge to 1,732 on Monday and respected that level in the short term. Nevertheless, we've still got heavy candles coming through here. Or more to the fact, the bearish case is still supported and therefore could see another down test, and a close under 1,732 brings in the target of 1,722 and the base, which is seen around 1,680 to 90 area. A strong bounce we've seen overnight from oil as it challenged into the bottom side of the range of $86 a barrel and was rejected. And from there, the market is actually holding quite well around 90.5. I do anticipate, as I said yesterday, that the market should continue its upward trek as long as $86 a barrel holds and looks towards the region of 92, 70, 90, and reassess from there. Well, that wraps it for the morning. Thank you very much for joining me. And as always, we'll go for the intraday report. I hope you enjoy the great start to the day.